Good morning, everybody. Hope you guys are doing well. So yeah, as always, right, we got to start with the news. Can y'all hear me okay? Just want to double check before we start. So let me know if y'all could hear me. Hope y'all had a good weekend. Yeah, just let me know if y'all could hear me. Just throw me like an emoji or something in the chat. Alright, well, I hope y'all can hear me okay. But yeah, so as always, right, we go to the news. We saw that there's no news, right? There's no news today. So when there's no news, we use the dynamics of the daily range and how each session operates within that daily range, and when the scheduled manipulation generally can occur. Generally, London obviously presents the higher low of the day, also produces heavy manipulation. Then going into New York session, right? A lot of times it can be a continuation of that, right? So because it is Monday and there's no news, we have to wait till 6:30 a.m. Pacific Standard Time, which is New York Open, to just anticipate the manipulation, because we wait for news to show us volatility injections, right? But when there's no news, right, there's nothing we can schedule around in terms of volatility, aside from the dynamics of the daily range. So as a rule of thumb, when there's no news, you want to make sure that you're waiting to make a decision until the New York Open. All right, it's pretty logical, I hope, because you want to look for what price is gonna do, who's it gonna go against, what liquidity is open, so on and so forth, right? So because that's the case, right, first thing we obviously do is come to the bonds and yields. So it looks like the yields have pretty obvious equal lows here, right? It did kind of sweep through in the 10-year. We got the 30-year here, so we're kind of stalled out, right? If we want to look at like a 2-week chart, we could see how this is a pretty large range. Maybe we go to the monthly, get a better view. So if we go from this low to this high, price is at equilibrium. Okay, so what can that bring? It can bring us, if you've spent any time on these calls with me the last couple months, when we're at equilibrium on the higher time frame, sometimes that can lead to consolidation, right? And Monday is generally consolidation and manipulation within the weekly range. So just expect that, especially when there's no news. Expect that, it could be a little harder to read going into Sundays and Mondays. But if you're becoming proficient at understanding the weekly range and you understand the manipulation that takes place, obviously you can end up going in there and finding opportunities on Monday, preferably. I would never trade on Sundays because it's just it's just starting and there's so many people rushing in. and it's the highest manipulation of the highest manipulation or consolidation likelihood within the weekly range, week to week, right? So looking at this again, that's a note you want to have, right? Maybe you even mark it down that we're at equilibrium within the range on the yields. It looks to me like if we drop down to the weekly chart, it looks to me that we have pretty obvious equal lows here. If we go to the 2-week chart, we can also see that there's this order block here that's kind of hovering around. All right, so we can also see that there's an SMT here at these lows, right? So this made lower lows, this made a higher low, and it's just been very, very range bound, okay? So you want to be very cautious, obviously. I would prefer to see if price could potentially continue to go lower, right? Because, I mean, we have very obvious equal lows here. But again, we have to make sure that we're observing how this order block holds. Now, if we were to get above this, like if we were to bounce from this low, obviously we would have upper range targets to then start identifying this is trendline liquidity here, but so is this, right? And if price gets down below this low, we actually have this order block to go off of as well if price proves that it wants to continue to go lower. Okay? So yeah, with that being the case, that's the observation here. We have a likelihood to go lower, again, unless the order block here holds, the midpoint holds, and we see some type of acceleration to the upside. That would promote bullish DXY, by the way. If this goes down, that's giving us a hint that, bearish DXY would potentially be on the way. So you go into the week with that type of observation, looking at like these charts, and then it kind of gives you like a piece to like anticipating what the weekly range will do on the DXY and the indices, right? So depending on what happens today and tomorrow, we may see more clarity, right? We're kind of range bound, like I said, the last couple of weeks, right? It's just been back and forth, and it's kind of fizzled out, right? So going into, before I get into that, that's my assumption and observations for this, right? So the order block is something that we want to monitor, right, to see if there's a reaction. I would again prefer to see if this could possibly drop, but the SMT here at this fair value gap in the order block on the weekly chart, right? We want to observe how that's going to either hold or not, right? But again, I would like to see if we could go lower to just sweep out the rest of the sell side liquidity. But we'll see if that takes place, right? We have to wait to get more clarity, right? So that's my observation here with the yields going into the bonds. And we'll pick this up too. We have equal highs above here, so that would promote potentially us going lower in the yields. If we see reasons to believe that it's going to go lower, then we have a justified position to possibly get above these highs, because it did leave those highs. But then again, you want to consider the fact that that's an SMT. So if this low was to break, right, I believe that would be a significant change in the delivery we have. So we got to observe that, right? We have a fair value gap here too. We have a low, a fair value gap, and then this swing low here. So if it was to break through that, that's 3 PD arrays from this daily chart. Okay, so that would make sense for me to potentially continue to want to seek sell side potentially. And let's see. So yeah, you can kind of see a more refined fair value gap here as well, even on this 8-hour chart. All right. So, and then again, we have equal lows here as well. But something else I want to talk about too, when we go into the new week, going into Sunday, going into Monday, one of the key liquidity pools, or a couple of the key liquidity pools that you want to have on your radar, are obviously the previous week's high, previous week's low, the previous day, right, which could be Sunday, along with the Friday's high and low, right, which is, if we go to the daily chart, you could easily see it. The Friday's range is here, so Friday's high, Friday's low. Okay, so those are near-term liquidity pools. If we're reaching up here, how could we work like sooner? How could we get a better feel sooner, right? Each day, previous day's highs and lows and previous week's highs and lows could potentially be targeted. Weekly highs and lows obviously take a little longer, depending on where price is at. Like right here, it may take a couple days, especially because there's no news. But a rule of thumb that you always want to use is looking at previous week's high and low, previous day's high and low, which is Sunday's high and low, and then also Friday's high and low. Okay, so those are the most near-term liquidity pools that you could work within to start navigating sooner, rather than having to only base your draw on liquidity on like a higher time frame. It kind of helps you have building blocks to getting up to that objective, okay, in terms of liquidity targeting. It's a more near-term perspective, right? Because we want to be able to be active if we're day traders, right? On a day, we may not trade every single day, but if we're wanting to have the opportunity to do so, there's specific liquidity pools. And I touch on a lot of other liquidity pools in my private community, but those are like the most useful ones, like near term, right? And you could base a whole model and only trade around those levels as a draw on liquidity in conjunction with a higher time frame PD array, right? So I hope that makes sense, because that's a very, 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 very important piece of information right there for price navigation and liquidity targeting. Okay, so, and then you merge that in conjunction with the weekly and daily range dynamics using Power 3, and you know, all you need is an entry model, and then you can have a whole model essentially, basically framed out from, you know, liquidity targeting, how to navigate higher time frame draws on liquidity, right, at a decent level, and it's consistent. These levels never go away. Okay, another thing you can add is London's high and low, right? Because on its way to a daily high and low or a weekly high and low on a daily basis, those levels get used as well, and those are important as well, right? So I hope that makes sense, you guys, because again, it seems very simplistic, but mind you, you don't have to make this overly complicated, right? Even if you trade the YouTube model, right? Consider observing how the YouTube model leads you, or leads an entry to attack some form of a higher low, that being previous week's high and low for a longer term perspective on its way to a higher time frame PD array, and then within that, previous day's high and lows, and then London's highs and lows. You know, it's like a stair step process, right? If you're aiming for a previous day's high and low, what did London's high and low do, and are those available sooner, so then you can target something before the daily high and low is reached, right? And then the daily highs and lows being attacked can lead you to navigation and liquidity targeting on your way to a higher time frame previous week's high and low, or some form of a, you know, daily or weekly or even monthly PD array. Okay, if you can get a monthly PD array in your crosshairs that you feel is highly likely, then you can have bias for weeks, right? You can have it literally for weeks, and of course it's not be all end all, obviously, but it's extremely helpful. If you go back and back test what I've shared so far, your navigation and clarity, because again, that's the whole key. Every time we get on these calls, it's to help build clarity and give another piece to that puzzle. You'll start to see an amazing improvement in terms of being able to have conviction behind a particular draw on liquidity on a daily basis, right? I just want to mention too, if you guys get value from the video, definitely don't forget to subscribe to the channel if you're not already, and definitely hit this video with a like. You are much appreciated if you do so. And thank you guys for being, you know, interested and hopping on these calls consistently. Those of you that do hop on. Let me go check the chat real quick. Oh, what's up, brother? Hope you had a good weekend, bro. Hope you had a good weekend. Hopefully we have another good week, right? Those of you that have been here for the last couple weeks and at this point, a couple months, I hope you've been getting value, right? Because we've had some pretty spectacular live sessions. Some we didn't participate in, but some, and some we did participate in, and some moves went an insane amount. Like, shoot, if you add up all the points based on the accuracy that we've had live here and in my private community, we've had the chance to bag thousands of points. It's been incredible. Okay, for sure, brother. I appreciate you subscribing. Appreciate you liking the video. Definitely helpful. So thank you, right? What's up, Maddie? Good morning, my brother. But yeah, I hope that what I mentioned, I hope that that has been kind of eye-opening. It may take you a little while to see the fruits of, the things that you learn here and throughout the videos on ICT's channel as well as my own. But it'll work. It'll happen for you. I promise you. And if you join if you join live sessions like this, you're just seeing things applied, and it helps you answer a lot of questions, and it'll help you just know, how it'll help you train your eyes to what you should be paying attention to. And again, that leads you to the magic word clarity, right? And then clarity leads you down a path towards being able to achieve consistency, right? So yeah, so we talked about the yields. If we could see it go lower, I would definitely prefer that. But again, there's SMT at the low, so I wouldn't be surprised if we choose to rally. In the context of that, before any of that even occurs, again, just like we talked about, right? You want to mention previous day's high and low, previous week's high and low. So this is the previous week's high on the bonds, or the bond yields, and then this is the previous week's low, right? So previous week's high, previous week's low. So draw on liquidity, right, could very easily be, without looking at any other data, right? Just to keep it simple, right? If it goes higher and chooses to break out higher, the draw for the week could be this previous week's high. If it goes lower, it could be the previous week's low, right? Between this high and that low, we're at equilibrium there as well, or really close to it. Okay, there's volume imbalance here. There's a fair value gap, inversion fair value gap here, potentially. There's a small fair value gap in here. But again, we're inside Friday's high and low. So far, nothing's really occurred that's significant. Okay. So those are the liquidity levels near term based on this daily time frame. Previous week's high and low, fair value gap, inversion, fair value gap, right? Volume imbalance. Or this is actually from this close here to this open here, that's a new week opening gap. And it's pretty ironic too that if you take a fib from this close from Friday of last week to the open, right, of last week's weekly range, that's a new week opening gap. So we're in the basically dancing between the midpoint of that as well as this high and that lows range. Okay, again, we have equal lows here, very, very clean equal lows. They may not want to leave that, so we'll see what takes place. That just goes hand in hand with what I was talking about in terms of the yields potentially wanting to drop lower. Again, that promotes the potential for price to be bearish on the DXY, and then that would lead us to possibly see the indices look to rally off of the drop that we've danced within, right, in the previous week. Okay, so I hope that makes sense. That's my observation there. So in conjunction with that, if that goes lower, it just justifies further the likelihood that this high and the fair value gap up here could be attacked at some point in the near future. Whether it's this week or not, it doesn't have to happen this week, and why. Why do I have conviction saying that we could still have decent engagements without having the full draw on liquidity or a full higher time frame draw on liquidity? Because of the logic I shared with you about previous week's high and low, previous day's high and low, and London's highs and lows. Okay? Because on its way to this, there's a bunch of daily candles. Those are previous day's highs, right? We have previous week's high, right? Previous week's low, right? We have an inversion fair value gap here as well. So as price runs higher, right? Friday's high, because when you're trading on Sundays, which I don't advise you to do, but if you're trying to engage on Mondays, you want to consider all these levels I mentioned, as well as Friday's high and low. Because if price is to break out and go higher, what is the next candle it has to break? Or what level of liquidity? The most near-term one is here and here. If this candle is going to be bearish, it has to take this out to reach down lower, or it's going to consolidate. Okay? It doesn't have too many options. Now, depending on the manipulation, obviously it could whipsaw people into all this craziness, but if it's unclear on the lower time frame, just remember to move up, right? Move up in the higher time frame to get a better feel for what is happening. Like that's another key tip, right? If you are confused on the lower time frame, if it looks blurry, if it's not clear, and you feel, things are just not very easily read in terms of draw and liquidity, you move up in time frame to get the narrative, right? Within that narrative, right, if you're able to have conviction behind, say, this going higher, then any type of push lower, it's not going to fake you out, right? It may be like, oh, you may question it, right? That's a natural thing. But again, there's validation and invalidation principles that we share all the time, or that I talk about all the time, right? From the very basic perspective, putting everything else aside, the validation and invalidation process can be just where the most near-term 3 PD arrays, right? And if those are broken, then, there's your bias. If they're not broken and you have an assumption like, this going higher, right? If 3 downside PD arrays aren't broken, in this case, the fair value gap, this order block, and this low here, that's 3. So if this low does not break, I still have conviction to go higher, right? So that's the 3 PD array application for validation and invalidation. And then obviously there's more advanced things you can add, like intermarket relationships, fundamentals, studying SMT, all different kinds of things. But to keep it very simple, this is a highly effective way to validate or invalidate a particular idea. And the same is true when you go to the lower time frame. And say your entry is on like the 1 minute, right? Move up to the 5 minute and find 3 PD arrays, right? You could see 3 PD arrays start to break on the 1 minute, but if the 5 minute structure starts to break in terms of 3 PD arrays and you're in an entry, then things start getting a little more questionable, because 5 minute is a higher time frame than a 1 minute, right? So levels on the 5 minute being respected will be much more impactful than a couple of PD arrays getting broken on that 1 minute, right? If 3 PD arrays break on the 1 minute time frame, but the 5 minute time frame structure is still in alignment with, say, a buy, then obviously it's probably just reaching lower to take out liquidity inside that 5 minute structure, and then you continue to go up, right? Validating structure from time frame to time frame, right? I hope that didn't confuse you guys, but that's it's one of those navigation principles, understanding the fractal nature and price, and just navigation. And we do pretty much that process on a daily basis, like right here, right in front of you, right? At least on a daily basis with my private community, but 2, sometimes 3 times a week here on YouTube for you guys, right, that are part of the YouTube family, right? So yeah, with that assumption, with us wanting to see if this has a likelihood to go lower, that should realistically give us a reason to potentially start to map out a narrative for this to go higher. We have our invalidation point, that's that previous week's low, right? So if that previous week's low is violated, okay, that will turn my interest away from trusting any type of bullishness, right? Price has been pretty reckless, right? Went higher to go lower, swept liquidity, now it's going higher, set equal highs, and now we're back inside this order block here, like I mentioned. Okay, so depending on what happens here, right, within the next like couple days or so, it'll give us further clarity, right? But before any impactful things occur to either reach for this extreme or something extreme down here, we have the levels I mentioned, right? Again, that's previous week's high and low, previous day high and low, Friday's high and low because it's Monday trading, and then London's high and low also, which sometimes is used on its way to one of those upper time frame liquidity levels. Right? Do you guys have any questions about the things I've mentioned so far? I really want to make sure you guys get this cemented, because it'll just help you also follow along better and allow you to be an independent thinker, right? So here, just let me know if that makes sense and we can move on. Alright, so the next thing we look at, right, is going to be obviously the currencies, right? So we started from the news, we went to the bonds and yields, now we're going to the currencies. So what are we doing here? We're, for one, mapping out the news events, so we're aware, right? So we're aware of what's happening for the week and when potential ideas could occur. Just to reiterate what I've been talking about also the last couple of weeks, when you're looking for, say, the higher time frame to attack a particular higher time frame level, you can really use the news to figure out when you can likely see that higher time frame move potentially start to deliver with institutional sponsorship. All right. So if we're looking for this fair value gap to bounce and go higher, if this hypothetically, then we would have to see Sunday, Monday consolidation manipulation. So inside this fair value gap, if it was to reach down there again, right, throughout the week, and then show us reason to go higher, that reason to go higher or timing of that potential expansion from that fair value gap, if we have a news event on a Tuesday or Wednesday, that's a red folder, and it delivers down the next day or so, then we could end up timing potentially, if everything goes to script, we could time that move potentially, and then be able to get in line with that pretty effectively. And then obviously all the other things that we mentioned this morning, those all come into play as well. Like if it comes down into here and then starts to rally, we'll have a couple previous days highs, right? We have this up move here, right? So this is an order block. So that can also be a draw on liquidity if we do prove to continue to go higher, right? Just, I hope that makes sense, because that's another one of those nuggets that I've been laying out every single call, right? The last couple months is using the economic calendar, how to navigate the economic calendar to your advantage. And, that has to do with being able to time things like just the same way we do using macros on the lower time frames. Well, the news events can help you basically have a framework for a macro style delivery, but on the higher time frame daily and weekly charts, right? So it's a very under taught tactic. I don't think I've ever heard anyone even talk about it, to be honest. The fact that the news events can be used as obviously a scheduling tool and anticipation tool for a particular move, because we need sponsorship It's not just useful in the lower time frames. That lower time frame volatility injection from the news events is working within a higher time frame delivery, right? Or higher time frame narrative, right? So when price gets down to particular levels, different PD arrays, or if it sweeps a significant high or low, the news event will tell you if, like, what day it has a likelihood of, going in line with that higher time frame narrative, right? It's like it's a timing tool, right? So yeah, I hope that makes sense. Right. So looking at this, obviously, if we think the yields are going to go lower and the bonds are possibly going to continue going higher, then like I just mentioned, right, this could very well choose to rally from this fair value gap. Now, if you label out 3 PD arrays here on this time frame as well, on this asset, to the downside, right, you can see how this is a fair value gap. We have a swing low here. So we already have 2 technically broken. So if this was to smash through this, right, that'd be a 3rd PD array. If you want to move up just so you have 1, then you could do that as well. All right, so pretty much if this whole fair value gap gets violated, that's pretty suspect, right? And then obviously, it may want to reach down into this order block, and then we could start reaching for even lower prices with confidence if obviously the bonds and yields end up supporting that, and especially if we break down below this low, right? We have met this level here, this fair value gap. It has swept that. So again, we want to watch and see what that's going to do when it gets down into here. If it just slices through this like butter, then obviously we have reason to trust the fact that it's going to probably reach down even further, especially if intermarket relationships end up supporting that idea. But for the time being, given the bonds and yields and what we believe could occur here, we're going to sit on the heels of that and anticipate this drop lower into the fair value gap to give us some kind of run. And we would prefer to start the week going into Tuesday and Wednesday. We'd prefer to see this drop lower, sweep out this low. Remember what I mentioned, Friday's high and low, right? Sometimes it's it's one of the things that's on the list of liquidity pools that are important, that are constant, that never change, and are the reason pretty much you'll always have something to trade off of, right? And target, right? So Friday's high and low, right? It may be an inside day. We don't have news. So if it does prove to be an inside day, the next day or so, and that means staying inside of the previous day's candle, right? So this is obviously staying inside this candle here. So that's represented as a inside day. If it breaks out of that, however, that becomes an outside day, right? Small ranges lead to large ranges, right? Or inside days lead to outside days, right? Just depends on obviously the context and what's happening, but that's just like a classification ICT has mentioned a couple of times. So if you weren't aware of what an inside day and an outside day is, that's pretty much what it means. You can also use that same logic for weeks, right? Inside week, outside week, right? So yeah. So I hope that makes sense. We're not going to be too complicated, right? Based on the bonds and yields, it seems like this is potentially going to give us a run higher from this fair value gap potentially. Now, if price rallies up here and seems like it has a hard time getting up there, say it runs up here to start the week, and it hits this fair value gap and this order block, and then just aggressively starts to push lower, that's very, very suspect. So it could want to use that narrative to possibly reach even further. Now we also have this swing low here. Okay, so now this is equilibrium between this current range, right? Given the most recent swing high and swing low, the two extremes based on this time frame. So we have equilibrium here. All right, so this equilibrium obviously helps identify premium and discount. Okay, so we can see premium and discount being shown. So this is a discount fair value gap. All right. So price running down here, we're still in line structurally with potential bullishness. Okay. Now if price runs up into this premium, okay, based on this current range, and uses this fair value gap and pushes away, then obviously again, we may have Friday's low. If it's left, we may have that as a potential target seeking lower prices, right? But again, I'd like to see things further confirm that across the board, because that's how, that's a big factor in high probability identification or low probability, right? If everything's all scrambled around and intermarket relationships are not justifying anything, and everything's just doing whatever the hell it wants, then that could be a problem. One thing you also want to observe here, right? So this is our potential bullish idea, right? Trusting that nothing has changed yet. Now, this high has been taken. This low has been taken. So that's buy side being taken, sell side being taken. So if price runs up into here, uses this fair value gap and pushes away, that is potential evidence of a change in the state of delivery from bullish to bearish. Okay? So obviously it's going to be impactful around this area to determine whether we are going to continue. Like if we get above this fair value gap, then that's just further confirmation. If it doesn't have any type of resistance from there, that's just deeper confirmation that we'll probably continue and reach above this high at some point. Obviously on the way to that high, if that was to play out, we measure out the wick, break it down into quarters, and now you have even more draws on liquidity. This high here on this candle, that's another possible draw on liquidity if this high is going to be seeked, right? So I hope that makes sense, right? And so again, if because pretty much this low was taken, this high was taken, right? You can measure this out, right? Measure out that range, right? And this here is a potential balanced price range. So if it comes up here, hits this, right, and has no evidence of price continuing to go higher, say it uses this and aggressively pushes away, then that, again, this is just another layer to justifying price continuing to maybe drop lower, possibly to seek this for the time being, right? So if this is going to act as a balanced price range, we would like to see it hit this and run aggressively to the downside, right, from that area, because that would be further supporting this idea that price may want to continue to reach lower. And then again, to amplify the high probability factor based on this observation, you'd have to have other assets promoting this idea. All right? So yeah, I hope that made sense. Right? When buy side's taken, sell side's taken, that generally presents a new dealing range. Okay? So that's why this is significant here. And then obviously since that broke through, right, and buy side was taken and sell side was taken, now you can measure out the high and the low off that specific piece of price action and start to get a feel for a balanced price range. Notice how this midpoint here is pretty much in the middle of this order block, right? And if this order block is effective and this is going to be a balanced price range, we don't want the midpoint of that order block or the midpoint of this range to be violated, right? So if that was to occur to the upside, then obviously we have even further evidence the price is going to continue to go higher, especially if intermarket relationships promotes that idea, right? So I hope that made sense. It may have been a decent amount I just dropped on y'all. But yeah, if you keep these things on your mind, if you take note with what I've just mentioned, basically throughout this whole 40 minutes from liquidity to this analysis, you eventually will see the light, right? I hope it's been clear enough though for you to get the gist of it, right? So again, I would like to see what occurs here to see if we can continue to promote higher prices. When price gets up into here, obviously we have the things that I've just mentioned to think about. But for right now, regardless of what happens overall for the rest of the week, The most near-term liquidity is down here. This Friday's high and Friday's low. Okay, so regardless of what happens, right, those two areas are significant right now, right? So we may look to see price continue to go lower, to then for the week maybe set the weekly low, to then go higher, or price may want to run up here, hit this fair value gap, potentially give us some signatures based on what I've just mentioned, the balanced price range, the order block, and the fair value gap, to maybe promote something going lower. Again, to further justify which side has a more high probability factor, you got to use the intermarket relationships. And because there's no news today, you don't just assume something going into the week, right? You have an idea of what you want to see. In this case, I'd like to see us try to favor buy-side liquidity being attacked. But if something changes within the next day or so, and price decides maybe to run up here, hit this, and then start aggressively pushing lower, then we can use the remainder of the week to then get in line with potential downside, right? So I'm going into this assuming based on the bonds and yields, because the bonds and yields are the bloodline of U.S. assets, and what they choose to do. It impacts and dictates, for the most part, the internal factors to create a particular directional bias or narrative. So based on the fact that we think the yields could potentially drop and attack the equal lows down here, and then the bonds could potentially support the idea going higher to attack this high here, I'm favoring, unless something changes, right? I'm favoring price using this downside PD array to then potentially give us a reason to look to target buy-side liquidity on the currencies. All right, so I hope all that stuff makes sense. All right, so now if all that stuff makes sense, which I hope it does, taking all that information and going to say, the indices now, right? That may, if all that stuff is justified and remains, then we'll see this price action potentially just be a drop to position ourselves to continue going higher. Okay, so what do you see here in the chart? Something should pop off the chart at you, hopefully, right? If it doesn't, we'll obviously mention it, but let me see if it pops off the chart at you. Can y'all put in the chat what particular thing am I talking about? What is popping off the chart at you? And I'll let you know if you're mentioning the correct thing. It's almost 6:30, so we'll get to that. But yeah, what do you guys see in this chart popping off the chart? Well, I'm hoping that you're seeing this SMT here. Okay, based on all the things that we've talked about so far, that SMT makes me think, exactly. So this SMT at the lows here makes me feel like everything that we've discussed is in fact supported. Yeah, exactly. I'm glad you guys saw it, right? So with everything we've discussed so far, the SMT here makes me think that, we're pretty much in the know, at least for right now, right? If we can get above this fair value gap, I'll be even more confident, okay? Because this will end up being an inversion fair value gap supported by many other ideas. Okay, many other intermarket relationship factors. Okay, And then obviously, if everything falls in line with what it's supposed to do, right, based on the observations we've talked about and the different liquidity pools we've mentioned, then we'll have a pretty strong conviction going throughout the week to continue to trust ideas that want to push us higher. Okay? And then obviously we can get in line with that. All right, so if price chooses to not do that, right, if it doesn't respect that and everything starts to begin looking like it wants to go lower, okay, we have this swing low, right? We have this candle here. If it was to get down below that, then that could be used as a potential resistance level. We have this inversion fair value gap. So again, if it gets above that, use it as support. We're justified, especially if intermarket relationships are showing bullishness, we're justified to go higher. Okay? But if it comes up into here, can't break through the midpoint, starts showing massive rejection from here, or if it runs right up, fills it in, and shows an aggressive push lower here, right? Similar to what's potentially expected here if it was to signal lower prices, then we would start to consider what are our liquidity pools to the downside, right? And again, to confirm and justify those this observation for either school of thought, obviously you have to use intermarket relationships, okay? So again, bullishness is, in my opinion, confirmed, at least for the time being, unless something changes, by intermarket relationships. Then that correlates down to the SMT here, right? See the run on lows here, fair value gap. On the daily chart, is there a market maker sell model that is nearing completion, or does the SMT invalidate that idea? Well, it's the overall narrative in terms of what's happening on the higher time frame can also kind of validate or invalidate whether a particular market maker buy or sell model is going to be fully valid. If there was a market maker sell model here, right, on the S&P, it may have failed. But then again, you can use market maker buy and sell models all throughout every candle, right? Like each bullish candle here can potentially have the possibility to have a market maker buy model continuously pushing price higher, like on those lower time frames, right? This retracement here may set up a market maker buy model if the narrative stays bullish, which again we used confirmation or things to confirm this potential bullish narrative with the other markets. Right, so again, market maker buy and sell models are very helpful. They're very useful to validate and invalidate things. But just looking at this daily chart, wait a minute, I'm on the 3-day chart. So yeah, you were talking about this as a market maker sell model. That's very much palatable, but you can see how that's fulfilled it here, and it failed to do so here, right? So the S&P failing to do it and giving us that SMT there, unless things start to show that it's going to continue to reach down there, this SMT, in my opinion, is like a roadblock, right? Especially because, we move up in time frame and we could see that things have not really changed in terms of the bullishness. Just looks like a really deep retracement. Then we also have the intermarket relationships, bonds and yields, also promoting the fact that bearishness is probably not fully going to continue, right? We need further evidence to trust that the narrative has changed. It just goes back to what I've been saying about narrative versus bias. Bias can change on a day-to-day basis. See, like the bias here all throughout this move sometimes turned bearish, right, to retrace. But the narrative, overall narrative, has been bullish. So the narrative did not change, and we continued to press higher. That's, in my opinion, that's the difference between bias. That's how I classify it, right? Between bias and narrative. Where bias can fluctuate day to day, while narrative stays intact unless something significant changes. For example, like if this low was to break, right? If this order block was to break, because then we have 3 PD arrays broken on a larger time frame basis, which could generally lead us to like changing the overall narrative, right? In my opinion, the narrative here is intact. This just looks like a stop run here, right? This, if it does choose to go lower on the NASDAQ, this turns into a breaker. Okay, so we want to measure out from this high. All right, I already have it. All right, so we want to see, is the midpoint of this breaker candle going to hold? If we're using all the analysis that we talked about, justifying potential continued buy-side delivery, then we should easily see this midpoint of this breaker violated. We should not spend much time there. It should be able to just slice right on through it, right? If we start getting hung up a little bit and it starts to pause or whatever, that may be an issue, right? And it may start leading us to believe that, maybe we are going to go lower, right? You should go into every week knowing at least having an idea of what the overall higher time frame narrative is, right? And then trying to go throughout the week, finding evidence that narrative is going to stay intact, right? And then obviously bias, like I said, today, could have a bullish bias, but if it chooses to go bearish on the week, right, then this bias it would have went from bullish to then bearish, right? And then maybe the next candle maybe Thursday would be bullish again, and then Friday maybe it continues being bearish, right? But obviously, if the narrative is overall bullish, we'd like to see more evidence to push higher, unless something changes, right? Again, that's something would be invalidating this SMT, right? Just, rallying, respecting this fair value gap here, okay? And then just showing significant resistance to this inversion fair value gap here. That kind of gives us, x-ray view, right, in terms of what could potentially continue to happen the next couple days, next couple weeks. But again, unless the narrative changes, narrative is generally not changing every day. Unless the narrative changes, I'm going to continue to trust that bullishness is going to stay intact, with some days that are, dropping lower to set up further positions for smart money to go higher, right? But yeah, this SMT, right? If I didn't, I hope I answered your question, but if I didn't, this SMT here, inside the bullish narrative, right, makes me feel like it's not going to reach down below here. If that was your whole idea, you can justify that a little bit later, right? If it was to use this and drop lower, then that could be a reasonable observation. The fact that you observe this as a possible market maker sell model, your head is in the right place if you're trying to use that tactic. Okay, it's a good way to observe things, right? Because market maker buy and sell models on the higher time frame, you could use those as bias confirmation or invalidation, right? This market maker sell model or potential market maker sell model, right, if you frame this out, seems that it failed, right? So we'll see what occurs there, right? But again, we've moved up now to the 3-day chart, so we could see a little more context above the daily chart, which again is a parent time frame. So we see that this may present us with reason to go and continue the narrative higher, right? Again, if that starts to change though, like if this inversion fair value gap holds, right, this could just end up being a piece to the market maker sell model that you mentioned, that you potentially framed out to the sell side, right? But given the overall context and the narrative overall on this upper time frame, we can see that there's still evidence that price will possibly continue going higher. And we also, framed out something on the bonds and yields that promote the fact that the bonds may go higher. Still, nothing's changed, right, in terms of the 3 PD arrays. And, same thing with the yields. And we also have a very, very eye-catching liquidity draw potentially to the downside here. Although it does have SMT that formed, right, between these lows. We do have equal highs up here as well, relative equal highs, right? So if we just start aggressively pushing higher, right, breaking through this high, then obviously we can start to potentially build the idea around things changing. If that occurs, then that justifies what you were pointing out earlier, with the potential for this low to be violated, right? And then to again further amplify those observations, right? If that was to happen on the bonds, on the yields, this was to rally, right? Then we can start also using this inversion fair value gap and studying how that's going to respect or not be respected. If it respects that, and we see the yields rallying, right, and then maybe the bonds declining, that just starts to build you further narrative to possibly go lower, right? And things may start to tip, right, and start attacking further sell side based on those observations, right? I hope all that made sense. But yeah, so 6:30 is in 15 minutes. So yeah, we want to see what's going to happen with all those observations. We do see that there's a fair value gap down here on the Dow, right? So yeah, it's overlapped with equal lows here. Again, this is Friday's low, right? We could see that Friday's low is also present here, right? Still an inside day. So far, we've got the NASDAQ showing that it may want to have an outside day, right? But we'll see. Price running up here, that's reasonable, right? This S&T here, obviously, promotes what we've been talking about, right? And all the different things we've discussed in terms of how the narrative has not changed, right? So yeah, if price chooses to get above that fair value gap we pointed out on the S&P, I'd like to see that act as a possible inversion fair value gap, right? We can also make the argument that there's potentially a bearish breaker up here that we can note as well. So price gets up into there, breaks through this, right? We also have one extra level that could give us an issue, right? We looked at the 3-day chart. These consecutive up candles was an order block, all right? Inside that order block, we can see how there's also a breaker pattern. So when price gets up into there, right, if it rallies up there like I'd like to see, once we get up into this area, we have to continue to monitor the validity of price continuing to go higher, especially because a higher time frame PD array would be getting tapped into, right? Because just because I want it to go all the way up here doesn't mean that it has to go up there. And that just further amplifies the importance of those liquidity levels I mentioned earlier, that being previous week's high, previous week's low, previous day's high and low, Friday's high and low for Monday's trading, and then London's high and low on a daily basis. It further amplifies the importance of that and kind of shows you that you don't need 100% of the time to have like a monthly or weekly level being attacked, right? Like a specific PD array. On its way to those PD arrays that you're going to possibly use, there's other levels that you can navigate within, especially as a day trader, right? So there's sooner targets on its way to potentially a higher time frame level. But again, if it was to change, right, and start to give us some signals that that's not going to continue, we have to be flexible enough to say, okay, things may be changing. I'm not demanding 100% of this, range to be filled in, right? You have to be able to observe levels where potential rejections and like roadblocks can come into play on its way to a particular level, right? Like this high, for example, right? If price is running up there and continues to show bullishness, but it hits this and then maybe it rejects from there, right? We have to be able to look at other assets, look and see what they're doing to continuously monitor if our narrative stays intact. Because it could change at any moment, especially right now in the times that we're living in. Okay? Like, we are in volatile craziness, right? So being flexible, being able to identify specific levels that could cause issues, or like short-term rejections, or just full-on reversals as we're looking to target particular levels, right? Like, it could come all the way up here, but then fail and then drop, right? And if I'm stuck with so much conviction, or too much conviction, and no flexibility at all to one side or another, that's a very good way to get chopped up, especially if you don't have good risk management, especially if you overtrade and over leverage, especially if you're just impulsive and you have to get in a trade every day because you sat at the chart. Those types of things can destroy you, right? And then maybe you end up being correct a couple times, right? But it just takes that one day of breaking your rules, falling off the wagon, that can totally erase months of hard work. And, in reality, it could take away months of confidence, right? Like, confidence is very hard to build, but very easily lost. Same with the money that you make in trading, right? It's very hard to build up and be consistent. But all it takes is one stupid decision, right? One bad day, one day where you let your emotions get to you, to literally erase not only the financial gains, but also erase the mental gains, right? And just drain your mental bank account, So that's, again, like I keep mentioning, and I'm going to continue to mention, no matter how repetitive and boring it may sound, the importance of rules. You have to have rules. Like, you have to, and you have to be able to know why those rules are in place. Like, for example, the limits on your trading, 1 to 2 trades a day. Okay, if you're able to solidly follow that, there will be no day will get a chance to erase months of hard work, because your rules stand in the way, and your discipline to follow those rules are just yet another layer of protection. And the same with the risk process. If you take a loss, drop it by half till you make at least half of the loss back, right? It's to make it so the equity curve, when you're observing it, especially in a funded account or anything that has a image showing your equity curve, if you drop your risk every time you take a loss until you make it back, it slows down the equity drops, right? And then if you have 1 to 2 trades a day, if you're not over leveraging, it literally forces you to not have a crazy equity swing, unless of course you trade every single day just to trade. Because the more you trade, in reality, the more risk you have to taking a loss, and the inevitable losses will come, right? So yeah, it's very, very, very important to internalize all these things. I mention them all the time, so I really hope that it eventually sticks, right? And you're able to adjust and realize how you need to operate. Okay, aside from the technicals, right? Because technicals only go so far, right? If you're a trader that has no discipline, if you have no rules, no understanding of why specific rules are important to have, I mean, it's just going to be a continuous spiral, and it makes it not fun to be a trader. So you want to keep this fun. Keeping it fun has to do with doing things properly, so you're not getting punched in the face every 5 minutes because of a lack of control. So it's just like how people that run businesses, how they have a process and things are repetitive and they do the same thing over and over, making improvements where they must. They don't just you don't see McDonald's because maybe they had a small profitable day selling their hamburgers. You don't see them now trying to come out with burritos, Okay, I mean, I think they have like a crunch, like a some type of chicken wrap or something, but I mean, they're not totally like moving away from what they do well, you know. So you once you find something that works for you, once you have a process that's consistent, you got to cultivate that, you know. And you don't have to know everything about ICT concepts. You just have to know specific things, like foundational processes that a trader must know. Like, how do you determine bias? What's your risk management process? Okay, how do you manage your psychology? How are you going to manage your psychology? You have to have a process for that. What is your targeting process? You have to have a process for that, right? Fundamental analysis. What's your process for that, right? How do you validate, invalidate a particular idea, whether that's bias or trade management, right? And there's many other little categories, right, that you have to have an answer to, you know, because it's just looking at things as a business, and it's enabling you to have the chance to have a consistent process. And once you have a consistent process, things start to really change. All right? So given all that we've talked about today, in terms of the yields, potentially, we want to see it potentially give us reason to go lower. And then the bonds potentially giving us reasons to go higher, right? If that changes, obviously we'll be ready for it. But before that even happens, we still have Friday's high and Friday's low to look at, right? So we want to see what happens here as well, right? We'd like to see price maybe drop a little bit lower to possibly see what a reaction would look like here. It'll probably have a reaction that's significant for this weekly range on a day where there's news events taking place. Today is not one of them. So again, today may offer a little bit of, you know, lackluster delivery. And that's why we've been waiting for 6:30, which is coming in 3 minutes, right? So as far as the DXY, right? I totally didn't realize that we didn't even pull up DXY. All right, so DXY, we have an order block here, right? If the yields are to go lower, we should see no real respect to this order block. But if it does respect this order block, right, we have trendline liquidity to the buy side, and then we also have this fair value gap up above here. So it wouldn't be unreasonable for price to want to rally up from this order block, getting us into this fair value gap, to then potentially try to drop lower from there, or maybe frame something to go lower from there. Now, if that doesn't happen, say we bust through this fair value gap, right, and it just starts just sliding through that, then obviously at that point we would have an order block basically being respected, right? We would have this weekly fair value gap presenting us with that run. We'd have a swing high broken after run-on stops, and then we'd have basically no response to this fair value gap. Then that would change my overall belief in what price is going to do. We do have these equal highs that were left. So if that was to happen, right, the longer term perspective, given the fact that they just left this there, would be this, right? This whole move here, right, if it breaks above this high and slides through this fair value gap, in my opinion, that's pretty much a prerequisite for us to reach for this. And then my bias or narrative would be bullish from that perspective, unless of course that changes, or unless of course this is respected, right? Hits this fair value gap and drops, right? If that's respected, then obviously we don't have to think about these highs or even these highs or anything up here. But if this run higher breaks through this fair value gap, then I have conviction, especially if we could start to see like maybe the yields start to rally, right? And then the bonds start to drop, right? Then that would justify this going higher. For the time being, right, I want to see potentially price run up into this fair value gap, given the fact that we've been bearish, right? I'd like to see how we respond inside this fair value gap, right? Price coming from this order block up into that I mean, that's a decent bias for today potentially to occur, right? That would give us reason to potentially see it would potentially see the indices look to try to drop as well, right? So this would rally up, that would pull the indices down a little bit, and then depending on what happens inside this fair value gap, that would dictate, whether we can trust bullish or bearishness to continue for the indices. Now, if the DXY can't even close above the midpoint of this and it just starts pressing lower, that's an indication of heaviness. And then obviously we could justify that as well using the yields and the bonds relationship, right? If the bonds then at that moment with DXY not being able to get above the midpoint of this wick, right? If the bonds and yields promote bearish DXY at that moment, that being the yields going lower and the bonds going higher, which is what I'd like to see, then we can know pretty much for certain, or at least have a high belief that bullishness in the indices and bearishness in the DXY will continue. Okay, so we have Friday's high and low there as well. So just saw that 630 just came, so let's actually shoot down lower now. So I hope that makes sense with the DXY. Again, we do have trendline liquidity up above us, right? And we will see how things transpire here. Let's go look and see. So we got a new week opening gap there. Let's go see, what did I mark out there? Okay, so that's a fair value gap on the Dow. All right, so let's see how that responds. So you have DXY chooses to use this order block as a launching point to get us up to this fair value gap. Then obviously Friday's low would be the potential target for today, right? At least near term. I think, did we take out the Friday's high? No, so it failed to take out Friday's high. Right, we are still in an inside day, pretty much across the board with the indices. So yeah, I want to see how the response is, right? I want to see what transpires, right? I'd like to see a little more of a picture. The next, ooh, that's kind of interesting. See, I really don't like this. If I was looking to try to short, I really don't like these equal highs. So I'd probably just, even if it does drop here, I'd probably just let it go. I don't like this because there's a likelihood that it'll run up there. And then on top of that, this is Friday's high. Right, so it's, in my opinion, pretty likely that they'll run up there. And if the indices did choose to drop, right, if they did eventually choose to drop, right, it'd be very reasonable for them to want to come up here, sweep this out, to then go lower, right? So yeah, I'm of the opinion that we should probably just continue to let price try to share what it's going to do. If DXY does choose to favor this, again, bullishness on the indices and bearishness on the DXY is supported, at least for the time being, between the bonds and yields. Okay, so if we find reasons to possibly engage that idea, then that's obviously preferred, right? There's, again, no news. So yeah, let's see what happens here. This is a displacement. I, again, don't Now, let me tell you this. If we would have ran these highs and then did something like this, and then maybe seen DXY give an aggressive push higher after that occurred, I would be fully behind putting an entry here at this fair value gap. One of the rules that I employ is I don't take sells when there's obvious equal highs that have a reasonable likelihood of being attacked, and I don't buy equal when there's equal lows around that have a reasonable, reason to be attacked, no matter what bias I have, because it could manipulate very easily, and you will miss trades doing that. I miss trades. Like if this does take off, I'm gonna miss the trade. But I've realized over the last 4.5 years that when you try to trade and there's obvious equal highs, right, and you're trying to sell, and it hasn't reached into that, they leave those things for a reason. Okay, like they literally do it on purpose, because then they'll come back and take it, and then all of a sudden, sometimes they'll run in your direction, or sometimes you'll just be entirely wrong, right? So it's just a high risk perspective to try to be able to sell when there's equal highs that have not even been touched, especially if you're trading on a Monday, okay, and Friday, and that equal high is it's the Friday's high, right? And we may see the rule that I just mentioned save a potential losing trade, right? I hope it does, right? Because if it does that, it just further amplifies the reason I have that rule. Guarantee you, many people saw this happen, and they're trying to push to sell here, especially if they're ICT traders that are just learning. Like, oh my God, there's a fair value gap, there's a displacement, oh, there's a run on stops. Not realizing that there's equal highs that are specifically Friday's high. Right? So think about it. If you would have taken an entry here and when opposed to what I'm saying, or if you maybe didn't know, now you know, how would you feel if you were in the trade, right? Or if you're in the trade, how does it feel when this is happening to you, right? Maybe next time, hopefully next time or moving forward, as price delivers like this, you now have a different perspective, right? See, so now price is getting above this high now. Right? Remember the narrative I said, how the narrative hasn't changed? Well, just because it drops here on the 1 minute doesn't mean the narrative goes out the window, right? So what do we do now, given the fact that price has now kind of shown its hand to us? Well, now we have this order block here. I remember NASDAQ hit that fair value gap, and we have SMT at the lows. Bonds and yields are promoting bullish indices, bearish DXY. All of that is justified or being justified right now. But now the DXY is kind of being a mess, right? Yeah, see the S&P did the same thing. It also had SMT at the lows there, right? And so any consideration of a potential entry at a minimum would have to see a return back to this order block. So yeah, this is a nice return back to it. So again, there's no news today, so I would honestly like to see what occurs here. Narrative is bullish, so in my opinion, this will probably hold. Because there's no news, I would prefer to see 650 give us a potential idea. Oh, nice, Nico. it is what it is, right? It is what it is, right? So the whole kind of point of Monday's trading in reality should be to start framing out the narrative for the rest of the week, so then you can effectively do things when the news starts to pour in on Tuesday, Wednesdays, and Thursdays. But if everything made sense, there's nothing to be worried about, even if you missed it, right? Think about what your risk management would be here if you're taking a trade on the NASDAQ. Where would your stop be? Right? If your stop has to be down here, it's probably not the best idea to try to even take an entry, right? Like sometimes you'll see an opportunity like, oh, maybe this order block is going to hold, and it may hold, right? But maybe entering at that order block may have too much of a risk, right? Maybe it has too large of a risk parameter, right? So that's another way you would miss a setup. So yeah, it looks like DXY is going to tank, at least for the time being. So let's see what happens here on the S&P and the NASDAQ. Yeah, there's no bearish SMT. There's no anything showing that this is not going to play out, right? So again, the overall narrative we've had is bullish indices, right? We've walked into the morning saying that that's what I'd prefer to see, and then bearish DXY. And it seems like all of that is going to come to fruition. In aggressive fashion, at least for the time being. Now, if this low was to break, if price just comes up here, if DXY rallies at the same time, and then we start taking out this low, then obviously my focus shifts to here. All right, so we just have to allow for price to deliver. This here, if it does break through this low here, we're basically in seek and destroy territory. So notice how Friday's high was left. This is very suspect. So now we got triple highs, right? So again, now if it would have swept that out aggressively, and then obviously broke through the low here, it'd be a different conversation, right? I would be thinking that, okay, we've already taken the highs, but this shows me that we're probably not done reaching for the highs, right? Because it did not take the highs, it just left it there. So looking at this, right, say price does go higher, right? Say it chooses to continue to run higher. How would you be able to position if you didn't feel comfortable with this and your risk management, you feel it's not in alignment? Well, look, if this could be a run on stops. It's a daily order block, right? Or not a daily order block. I think it's like a 5-minute. Yeah, 5-minute order block, right? There's a swing high here. If this breaks above that, right? There's a run on stops, shift in market structure, 5-minute order block. Just look for a fair value gap to enter, and there's your continuation variation of the YouTube model in this current price leg, right? It's another tactic that I mention a lot. Notice how we're trying to get above this new week opening gap. So yeah, if DXY was to start to really press on higher and start aggressively smashing higher, once we break above this Friday's high, if we were to shift market structure here, right, that would be significant and start having me feel like, maybe price will want to look to the downside. Now, if that doesn't happen, obviously we stick to the overall narrative, just like painting contingency plans. If bullishness was to start to seem like it's going to stop. But at this moment, right now, it doesn't. Remember what I said about Friday's high and low, how those would be important? Well, there was an opportunity there. Right now, whether your risk tolerance would have been accepting of this to go higher, right, then, that's obviously a personal thing. But clearly, right, Friday's high kind of showed a significant, or its significance here trading on Monday, right? It offered an opportunity, and that could be a model that you use on a weekly basis, right? If you trade on Monday, right? It could be your Monday protocol. It's what I like to use, right, when I'm trading on Mondays. Now, from this low to that high, you got an extension. So first TP, or second TP is hit, right? First was the equal highs. I said that the equal highs there from Friday, how it left it, I was pretty sure it wasn't going to be done with that. Clearly, that observation was correct. Clearly, the overall bullishness that we've painted throughout the day has been accurate yet again. All right, so everything that we've discussed today has proven validity. Okay, yet again. So there's a method to the madness, right? So here's another opportunity before the fact that we painted, right? Offered over 90 points, right? So the idea for a continuation variation that I mentioned was not offered. Okay, it was not offered here. So yeah, we're going into 650. So let's see what things choose to do. DXY seems to want to do a lot of stop hunts, right? Hunted the stop here, failed to get above here, broke lower, swept out the high here. All right, so again, I'd like to see DXY continue to show bearishness. Now again, if we were to explode higher, right, if we break through this high now, start looking like it wants to attempt to get above this high, if we see in conjunction this drop lower, start smashing through these fair value gaps, then obviously that changes the near-term perspective here. And then I start viewing this as a potential run just to potentially go lower. But yeah, if everything stays the way that it is, though, we stick to our bias. We're inside of a bullish narrative still. So guess what? We favor buys. And sells are looked at as high risk. They are looked at as short term in nature. So that will affect the way that you position your targets, how much expectation you have out of particular ideas going lower, versus buys. Like buys, you may be able to hold a little bit longer. Sells, you probably want to get out a little bit sooner. Right, so price is continuing to push higher. We do see DXY looking like it's being a little opposed to that belief. Bonds and yields are not doing much at all. And so indecisive bonds and yields could lead to indecisive or other assets lacking clarity, right, for DXY and the indices. Right, so let's just observe what's going to continue to transpire here. Looks like the potential for this to drop lower to hit this fair value gap deeper, that seems to be in the cards, at least looking at this time frame. Looks like we've rallied up. We made an immediate rebalance here, at least right now. So that could lead us to possibly justifying this downside move to the fair value gap as a draw. Again, once it does something in here, depending on what it does, that'll help give, futuristic clarity for like the next couple of days, maybe even the next like week or so. But with that drop, right, if DXY continues to rally, right, we could potentially see again this just wanting to take previous week's high or previous Friday's high, position themselves, because think about all the liquidity that they've taken right now. They've taken a ton of buy-side liquidity, people that were profitable last week. So now they just triggered in a massive liquidity pool, right? So there's a ton of liquidity flooding into the market right now because of Friday's high being taken and those people that were profitable last week, right? So those people that are profitable last week could be getting dragged down by their hair, right, to then maybe start to look for Friday's low, right? I think Friday's low, did we mention Friday's low? Yeah, Friday's low is down there. But we'll see. We shall see what happens. So we are now inside the 650 macro. Let's go see. Wouldn't it be ironic if this current macro turns into price trying to attack the sell side? Wouldn't that be interesting? Right. So again, the overall narrative is obviously still remaining bullish for the time being. We have a cracking correlation here. DXY is seeking both sides. The bonds and yields are basically range bound. Okay. It is Monday. There's no news, right? So we got to make sure that our situational awareness sees that. All right, we do have equal lows here for the indices, for the NASDAQ. And we also have very, very, very obvious equal lows here for the S&P. You can see at these highs here, we have SMT. So if DXY was to continue going higher, because we've already taken out Friday's high and now we see a small SMT, if that stays intact and say this low breaks, then we would start thinking, oh, maybe price is going to want to seek these lows. Otherwise, this should hold and continue to keep going higher because we're inside that overall narrative, right? Trusting and knowing the higher time frame narrative assists you in continuously being able to press on through a narrative or through a bias, even when price tries to go against you, right? If you're in the moment and you see a retracement, right? So it's vitally important to have higher time frame understanding. So let's see how this is treated. Again, we've already swept out Friday's high. Okay, so we've triggered in liquidity to the buy side. Massive pool liquidity to the buy side has been taken. Okay, so let's see how this low responds. If this continues, right, if this continues and does not at some point in the next hour or so choose to continue to break lower, promoting bullishness, again, this may have a shift after taking this Friday's high, which triggered in a ton of liquidity. It may give us a signal to possibly find an idea to maybe seek this liquidity here, right? But again, we wait. The macro here, it's a pretty good scenario seeing this liquidity pool taken inside of a macro. And then if we get that small shift in market structure there and DXY continuing to go higher, I mean, that's pretty much starting to paint a narrative that these lows will get taken, even inside that higher time frame narrative, being bullish, right? So understanding that Sunday and Monday creates consolidation and manipulation inside the weekly range, understanding that in a higher time frame narrative, like a large time frame draw on liquidity potentially, understanding how to navigate the weekly and daily ranges inside that higher time frame narrative, and knowing that sometimes it'll go against it, and being able to understand the manipulation that takes place related to that. It's one of those things that takes a while to understand, right? It's one of those things that you have to sit like you guys are doing right now and continue to watch the thought process, watch the different characteristics that could change the overall view, right? Lower time frame, or from a lower time frame perspective, while still trusting and working inside that higher time frame narrative. See, so this is a significant drop here from a significant run on stops. DXY seems that it's promoting us to continue. Now, if these down candles hold and support price, this should have a retracement in here to then possibly give a decent risk to reward. And if it's a sell inside the bullish narrative, we put it at half risk. So if you're risking 1%, you want to risk 0.5%, and then we would look to target the lows down here potentially. All right, so it looks to me like this is potentially going to want to continue trying to attack this liquidity up here. And that should translate, reasonably translate to this potentially trying to seek the downside. Right. Again, this is a counter trend idea. So there's a high risk for it to just rip through it and continue to go higher. I've seen this Friday's high taken, seeing DXY continue to rally, given that it's Monday, and if we are bullish, Sunday, Monday creates consolidation manipulation. I'm anticipating that this could be a drop inside the weekly range for the manipulation to set up the potential bullishness. Seeing this occur also should be able to allow for us to see GBP USD and Euro USD also aim to attack its Friday's low, right? All under the umbrella of us trying to see price eventually choose to rally. So yeah, we'll see what takes place here. Easy peasy. Easy peasy. Okay. Quick little 40 bag. All mentioned live, as always. Right? To the pip. Right? Beautiful patience, narrative, bias, navigating the manipulation on a Monday, understanding Friday's high, how significant it is, and the fact that there's liquidity there. Okay? Trusting that it's going to go lower. It may reach down below these lows, like I mentioned. Again, as I always state, do you have to get the full draw on liquidity? Are you completely opposed to taking a 40-point move because you have to get 100 and look crazy and like a savage on the internet or to your friends or whoever? Right? Do you have to have that? Just think about it. If you've ever dealt with that problem that you hold the trades way too long and you're in profit and you got like a good amount that you could take off and make some profits on. Think about all the times that you've demanded 100 or 200 or 300, right? And you had like maybe 50 or 40 or even 25 to 30, and you just held it so long because you demanded it, and then it comes back and bites you in the ass. Just imagine, right? Or just think about it, because all of us have been there, right? All of us have been there, right? And a lot of us will continue to, unfortunately, make those types of very, very avoidable mistakes, right? It's nothing to be ashamed of, right? But it happens. But think about what you see me doing here, right? That was a 40-point move that made $435. Okay. Is $400 not ideal? Like, do you have to make 1,000? Like, do you have to be able to screenshot a 100-point move? Or are you comfortable with having this mindset? Doing what I showcase constantly, both here and in my private community. Making those small little base hits that eventually turn into home runs, and consistent income. No guarantees, obviously. This ain't financial advice. But the shift in perspective to being able to attack simple goals, right? Small objectives, stacked up over time, right? Building the patience, building the skill set, eventually will lead you to being able to knock down those 100-point moves. And then when your account's large enough, you can do bigger lot sizes and then take one off where you used to take your full position off. Or you don't even ever have to have like crazy runs. Like, you could just capture 20 to 30 on the NASDAQ and just live there, right? Like, what's the problem, right? I know that I had such a battle with myself over this topic. And once I just submitted to the fact that, dude, it's easier. Think about this perspective. What is easier to attain, right? Realistically, 100 points or 40 or 30 or 20 points on a regular basis, right? Not every daily range is going to even go 100 points, okay? Sometimes it'll only go like, 50 to 80 points. Maybe not in the NASDAQ, right? NASDAQ rips people's hair out, like even in like a small range bound day. Like today, this whole range we're working is like 100 plus points, right? But regardless, what's easier? What would be easier? Catching 5 points in the S&P or catching 50 points a day in the S&P? 5 points. Just imagine how many times you've done this in a row, where you've been in profit 5 points for like the S&P or 10, 20 points for the NASDAQ, and you could have just taken it off and had a profitable day. But then you hold it too long, it comes back and bites you in the ass or put you at break even. Then you take another trade the next day and you're in profit again. And if you take it off, you would basically have had 2 profitable days, but you held it too long and it stopped you out. Now you're in negative. And then you get in again and you're up in profit again. And you could take it out and have a third straight day profitable. But you're just not satisfied. So you hold it long, and then it comes back and either break evens you again or pulls you deeper into drawdown. Just think about it. If you just remove the need to take pictures or screenshots or impress anybody, and just focus on impressing yourself, right? Things will completely change for you. I promise you it will. It did for me. Like if you ask anybody that I used to trade with, even one of my friends named Byron that's in our private community has been with me since I started trading. I mean, the comparison to how I used to trade and what my expectations were and what I demanded the market gave me is so different now. And the previous way that my perspective was, wouldn't even imagine where I'm at right now. And I don't aim for 100 points a day like I used to in GBP USD and in Forex, because that's where I started. I started when I was trading Forex, or like that's how I started rather, right? And many of us that trade ICT concepts, pretty much that a lot of times that's where we start too, or that used to be the case until he focused more on indices, right? But yeah, if you just change your perspective, journal it down. Journal the changes that you make in your perspective. Treat this like it means something to you. Like note down, take pictures, just like how you probably want to take pictures of your family and your friends and all these fun times that you have in your life. Treat this like you're going on a trip that you just don't want to forget any minute of it. Treat it like that every day. You're doing something that is beyond difficult. Like it is the hardest thing to do. And for us to try to sit here and make it harder than it has to be, I mean, it's just unnecessary. And you don't have to have these extremes to be able to add to your income. Maybe eventually quit your job, or maybe, work with, your job and trading. Or maybe you just want to cut hours at your job. Mind you, this ain't financial advice. I'm not a financial advisor. Nothing's guaranteed. But just think about making these small changes. Like, would you have not been satisfied with the entry that I showed before the fact again? There's been so many winning trades the last couple months. Again, some here and many in my live group calls privately. That's just unbelievable. Even if you took down 3 a week, like we're pretty much looking at things every single day, finding things almost every day, almost in line with what price is doing every single day. And I got some private community students on this live call, and if I am saying anything that is a lie, or if I'm out here saying I'm doing things that I'm not, they will be the first ones to come out, just like, we would do if ICT was lying. They do the same thing for me because I'm in the public eye. And then you add on, some of the students that I see improving and being spectacular. If they were lying, then I would call them out. But they're being amazing too. Even some students that just follow me on YouTube or on my Instagram. Like, I've given them advice, like similar to what we've talked about here. And the testimonials about them changing their whole view just off of a conversation, not even showing any technicals, is fascinating. It's fascinating, right? So if you guys are here on these calls consistently, I hope you can gain some inspiration from these types of calls when these things happen. I hope you're definitely starting to take leaps in your understanding. And, I hope it's starting to make a little bit more sense, right? I'm not like most of these people on YouTube that come on here, I need to find 500 trades and I need to feed my following with 1,000 trades like you guys are drug addicts or something, right? Like it's insane. We look for very precise things, and it takes time. Some people don't have time or patience to wait, right? So they'll come and go and not get any of the value and continue to be hit and miss constantly because they're looking for some holy grail, some one sentence that's going to fix everything, and it's just not the case. There's so many different things that have to be aligned. There's so much practice that's required. There's so many things, you know. I hope that you guys that spend time here can also start to see that it doesn't require you to know every single topic that is in the library of ICT. Like you'll find eventually the things that work for you. But again, you want to be exposed though to all the information, right? And if you can, have somebody that can sit with you regularly and do this type of stuff, so you can just listen to their dialogue, listen to them, you know, express what's happening in the chart, what you may be missing or not seeing in the chart, right? Have them expose it to you, so then you can, you know, start to use it. Like, for example, the Friday's high and low theory, right? Or previous day's high and lows, or London's highs and lows, the significance behind those, and how those pretty much 98% of the time will give you an opportunity weekly, daily, for the most part. Right? Maybe you didn't know that. Now when you go into the chart, moving forward, hopefully you're able to identify these areas and then see just how common it is for those things to be attacked. And then maybe that'll help you, right? But you got to be very open to being incorrect. You got to be very open to hearing uncomfortable truths, like the targeting thing I mentioned earlier, right? Because we all want to make 1,000 points a day. I mean, who doesn't? If that was possible and there was a way to do it, I mean, everybody would want to do it. The closest thing you're going to get is ICT concepts, right? But it's going to take practice, you know? But I hope that at the end of the day, ICT concepts are, at this point, in my opinion, so undeniable that they work and there's validity to them. I hope that keeps you guys, at least, you know, when you're going through the harder times. I hope that it can build your inspiration and keep you going. You know, because you've been bit by the bug, okay? Like ICT says, you've been bit by the bug. Okay, you see how you can make money. You see, I mean, if you're watching my videos and my lives, I mean, you see it constantly happening over and over and over. And you can put 2 and 2 together in terms of success and what's possible, you know. But once you've been bit by the bug, it's going to eat at you forever, because you know there's a better way. You know there's a way that is extremely flexible that you can do a couple times a week to add to your stability, right? To add to whatever goals and dreams you're trying to achieve, right? The bugs bit you and you're infected. And every time that you think about quitting, or if you do ever choose to take a break, because no one ever really quits, especially when they see things happening like this, they always come back. But if you were to supposedly quit, it's going to eat at you constantly. You're going to be like, oh man, like, well, I wish I could do it. It's just, you know, it's just so hard. But it's going to eat at you constantly, no matter how badly you feel like you can't do it. It's going to eat at you constantly, because you know, like, and then you watch people do things and you watch them do it, and it's just going to be one of those things that just doesn't go away. So you might as well dig your heels in, like ICT says, and just spend as much time as you can studying. Spend as much time as you can watching things like this, as long as it's proven that they can do it, you know, which I hope that I've been able to do for you guys over the last couple months. You know, it's incredible once you see the clarity. And that's why I keep saying that this is the whole point in the calls that we do. It's all giving more pieces to that clarity puzzle. Because once you have clarity, The rest is up to you. Once you have your processes and understand how things are and how you navigate and how you manage risk, and you develop a trust within yourself to follow those rules that you apply, and the risk management rules and draws on liquidity, and once you develop that continuous process, even if you're not profitable, the fact that you can go into the chart and determine what the hell you're trying to do or what you're not trying to do, I mean, it becomes a whole lot more clear that it is attainable for you. I do the same thing every single day, the process, every day. So hopefully you guys can take note of that continuously and just keep adding to your arsenal. I don't come on here and talk about anything that is useless. Every single topic, every element, plays a role in the clarity that I have to share bias with you guys live and not be worried about it. My expectations have grown since I was a new trader. I don't care if I'm wrong at times, because I know for a fact and have proven to myself and others that we are right more than we're not. And we have context as far as why we're right more than we're not. And it repeats over and over and over, And it took time for me to have that mindset, just as it's going to take time for you to have that mindset. All right? But I promise you, you get around the right people, right? You get around people with the right intentions that actually want to help you, and you continue to dedicate and you never quit, no matter how hard it gets. Taking breaks is fine if you have to. I have a couple of students that take breaks here and there. It's hard, right? The reality is, until you get it, it's hard. Okay, trading is difficult. It's got one of the highest suicide rates in a profession across the globe, because people put their heart and soul into this stuff, and they have horrible influencers that don't have your best interest in mind. Right? So that's part of the reason why I have this channel and my private community. So we can try to be the change that we want to see in this industry. And if I can give clarity to as many people as I can, and I could see them light up, whether they're just on YouTube or if they come and invest in themselves by investing in the community, the private community, if I can see them light up, then my time here is not wasted. Whether that's here on YouTube, having a conversation with someone that which has happened multiple times, and then things change for them, or in a more intimate setting with one-on-ones and different things like that. I feel, I've been able to give back some of the blessing that I've been gifted. That we've all been handed this weapon, this insane weapon that has the ability to change your entire family tree. And it has happened for many, many, many people at this point that are public, that trade ICT concepts. Jade Cat being one of them, right? It's a charter brother, right? And many other charter brothers I got, like CJ Trades, right? He's a savage too, right? There's many, many traders that I know that are doing phenomenal things, that are better than me. There's a lot that are better than me, right? But you got to remember, you want to cement what your goals are. Are you trying to get a Lambo? Are you trying to buy a mansion? Are you trying to retire your family? Or are you just trying to live without a job? What are you trying to do? What are your goals? Right? Paint that out. Paint it out. See how much you can make in a month that would allow your life to be comfortable and make you feel like a success. Because having a Lambo doesn't mean that you're successful. That means you're probably going into debt. Okay? And I mean, all those things are nice and all, but think about what really matters. Does time with your family matter more than a Lambo? Does time with your family or your friends matter? Do you want to travel? Do you want to have free time so you could just chill? Right? Do you want to just Do you want to invest in something that helps the world, right? Charities, different things. You want to look out for a friend that's maybe going through it. Do you want to have the ability to make that decision? Right? It opens up a lot of different avenues, right? So yeah, we have talked deeply about price action this morning. There is a ton of things that we've discussed, and what I wanted to see happen has occurred. So in my opinion, there's not much more to discuss unless you have particular questions, brother. If you do have a particular question, I'd be happy to answer your question, right? But yeah, right? There's many things that you have to think about outside of trading, technicals, that will enable you to be successful. Keep in mind, if things like what we've been discussing and what we discuss all the time in terms of psychology and goals and different things, if you push those things to the side and you think technicals are the only things, you'll be sadly mistaken. So you must have came fairly late. We have been on for 2 hours, and we've broken down everything that has to do with the overall bias. We've broken down the draw on liquidity today. As you can see, there's an entry that was given based on the whole narrative and the bias within that narrative. We have went all the way through the higher time frame charts from the monthly all the way down to the 1 minute, where we chose to take an entry. And we have discussed intramarket relationships. So we had a very deep conversation about many, many, many aspects to bias for this day, for the possible week, from the monthly chart on NQ, all three assets. Actually more. We had DXY, then we had the bonds and yields. We had all these different things. So the overall narrative has been continued bullishness. The bias for today, we wanted to see what price was going to do using Friday's high and low. And the invalidation points for that higher time frame narrative, right? But is there anything specific in terms of bias that you are concerned about? But yeah, the bias, well, narrative, because bias and narrative are two different things like we discussed earlier. Narrative is still bullish for the indices, and overall bias will fluctuate based on what happens inside this weekly range. But the draws on liquidity for today were both Friday's high or low. In this case, it ran Friday's high, and DXY ended up smashing. Oh yeah, it's no worries, brother, but when I'm in a conversation about something that has to do with other important topics, you have to realize that we have been here for 2 hours. So there's many, many things that we were discussing, right? And we're actually pushing towards the end of the call, in all honesty. But the overall bias, well, narrative, because bias and narrative are two separate things. The overall narrative was bullish for the indices, all three of them, based on the intramarket relationships and many, many things. I start live streaming every or 2 times a week. Generally, after this month, it's going to be Tuesdays and Thursdays. But we live stream 2 times a week, and I'm not going to be live streaming here tomorrow because I have to be with my private community. But we will be back after today on Thursday to kind of review all that we've discussed today in the call, because we talked about a tremendous amount of stuff today, setting the stage for what's to come. So we're going to see if everything's in alignment on, come Thursday. And the rest of the time I'm going to be in my private community. But there will be a lot to discuss, I'm sure, based on all the news events. So every time we go live, it's going to be from either 5 a.m. Pacific Standard Time or 5:30-ish. It's always going to be before 5:30. So probably 5 a.m. to 5:20 for the rest of the month, it's going to be Mondays and Thursdays for YouTube. Pacific Standard Time, brother. Do you follow me on Instagram? If you don't follow me on Instagram, definitely follow me there, because I make a lot of announcements there, just so you never miss the videos. You can if you push the notifications too on the YouTube channel, you're going to be able to see the notifications as well. And again, if you have the notification bell pressed, and then you're also following the YouTube or the Instagram, you'll see the stuff, or the announcements, the stuff. Yeah, no worries, brother. I appreciate you hopping on. But yeah, guys, so it looks like the delivery we looked for 2 hours ago, right? The one that we framed out for this idea basically delivered. The levels that we mentioned that could be significant, right? We'll just do a quick review and then we will head off. Okay, so we were looking for what the yields were going to do to help dictate what the DXY would do. Okay, so we see from this high to that low, there's that equilibrium. We have a fair value gap. I assumed that price may want to look to seek down below these lows, because that's the only super obvious thick pool of liquidity, right? So we wanted to see, if we could drop down and attack that, or start looking like it's going to attack that. And then similar over here as well. We're also monitoring this high, and this fair value gap and this high, to then assist us in whether things are going to change going higher or not, right? Because if this goes higher, DXY should go higher. If this goes lower, DXY should go lower, right? And then with that school of thought understood, you come over here to the bonds, right? And if the yields are going to go lower, then we want to see this go higher. That would further confirm DXY going lower, and then the indices going higher, narrative-wise. And then bias, obviously, like we talked about earlier in detail, bias fluctuates back and forth, right? In a bullish trend, it could have a bullish, in a bullish trend, it could have a bearish retracement. Okay, and then so in that bullish narrative, you have to realize that not every day is going to be bullish. Some days are going to be bearish to seek internal liquidity, right, to the downside to continue that bullish move within that bullish narrative, right? Narrative doesn't change every day. Bias can fluctuate based on retracements and continuations and consolidation, right? And then obviously invalidation for bullishness would obviously be this low here, this low here, right? So if it's smashed through that, and then we also see the yields go higher, then obviously that changes the internals, which has to do with the, it changes the internals, which has to do with the narrative changing. So if this drops lower, breaks through this low, then the bullishness would stop, and it would probably have a hard time rallying in the NASDAQ as well, and the other indices, right? But if we continue to see this favor going down here, If this can continue to favor going down here, maybe seek this low here. Maybe finish off these equal lows here. Maybe fill in the rest of this. Obviously, it's not going to do that in one day. But if that can happen, then obviously we're going to continue seeing DXY be bearish, even if price wants to reach up in here, which it very well could, and still continue to the downside. I'd like to see this run up into the fair value gap, see what it does here. This was the draw, this potential draw for today, which is also something that justified our sell that we took, right? Which still may continue to drop because we have trendline liquidity, especially if DXY wants to do what I just mentioned and reach up for this fair value gap. Once it gets up into here, then we could, reasonably think that, the timing may be right if it does have an impulse lower. Okay, if it does impulse lower, then obviously the indices will continue going higher. Okay, and again, that justifies with the yields going lower, promoting bearish DXY, bonds going higher, which promotes bullish indices, right? Maybe we can see this also drop lower and then rally, which is also promoted by bullish bonds, right? And if all that works in alignment, then we have a pretty solid understanding of whether we can trust that the NASDAQ and the other indices are going to go higher or not, right? Another key element we have to watch for is how price responds inside this fair value gap here. Okay, see how the delivery inside this fair value gap responds. See if we go to this 3-day, we have this potential breaker. So if things start to support price going lower, right, and doesn't just break through this to the upside, which is what I want to see, then we would obviously have to start considering maybe the rest of this fair value gap. But unless that's proven, unless that is proven, we're going to continue trying to reach for buy side delivery. All right. So that pretty much wraps everything up. I appreciate you guys that have hopped on. I hope you guys got some value from the video. We will be live again on Thursday, anywhere from 5 a.m. to 5:20, before basically 5:30 a.m. Pacific Standard Time, to then review all that we've discussed today. But yeah, if you guys have any questions, definitely leave them in the comments. If you haven't subscribed, definitely subscribe to the channel. Hit the notification bell so you don't miss a video. And I will see y'all on the next one. No worries, brother. Wait, let me answer your question real quick. Why do you use the 3 days chart? Well, it's kind of just preference. I like to see, so if I have like the daily chart, I like to see timeframes above that aren't fully like the weekly chart, or like stuff that's like super high up. It's just refining things a little bit deeper, right? Like the daily chart is subservient to the 3-day chart because the 3-day chart is above the daily chart, right? So yeah, Nico, you take care too, brother. Shoot, I'll see you live tomorrow in the private community. Maddie, same thing. Shoot, you're about to be a legend, bro. That's for sure. Hopefully we can get Harley to also hop on and join us as well. But yes, so yeah, it's kind of like a personal preference with the 3-day, 2-day. So definitely consider that. You don't have to have all the traditional that everybody else has, right? Just remember the logic that, when you have a daily chart, the 3-day chart is going to be stronger and have more things that you can observe than just the daily chart. It all works together, right? So just mess around with it, right? It's just one of those things I've picked up through experience. And don't let it confuse you, obviously. And if you do ever have a confusing situation with that, we can have a conversation, right? We could talk on Instagram, or maybe we can dig a little bit deeper into price navigation in a video, and maybe we can go over some stuff about that as well. But all right, guys, again, I appreciate you guys and your support. I hope you guys got value. Much love, and I will see y'all on Thursday at 5 a.m. All right, take care.